Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this special episode at the Global Financial Leadership Conference in Naples, Florida. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on futuresradioshow.com. We kicked off today's show with an update from CME on a possible micro crude oil contract. We talked about the growth of options and micros at CME Group, the launch of Bitcoin options and ESG futures, and last but not least, why more and more traders have been trading the Russell 2000 futures. So without further ado, let me take you right to those interviews. First up is Derek Sammann, Senior Managing Director, Global Head of Commodities and Options Products at CME Group. Derek, thanks for joining me.
Thanks, Anthony. Great to be here in nice, warm, and sunny Florida.
Well, Derek, I got to tell you, from Twitter to my email inbox, you're the most popular guy right now in the futures industry, and you probably don't even know it. It's because everybody keeps sending me messages asking me, is there going to be a micro for crude oil?
Yeah, well, I got to tell you, it's we're getting a lot of the same inbound traffic, and I think the success we're having and showing in the micro contracts and equities, and one of the advantages of being a multi-asset class exchange is great ideas get to travel across asset class. So we're hearing a lot of the same feedback. We're working on that. We're soliciting some intermediary feedback and user customers, and I will say that we will have a decision on that, but we're hearing a lot of the same energy and desire. So despite the fact that we do have a mini contract right now, and we are seeing that grow, we are seeing a pretty healthy demand for what might be smaller size contract as energy continues to be a great growth driver for us. So more to come on that.
Well, thanks for the update, Derek. And I'll tell you what, how about these micros? They've just basically, they shook the industry up, right?
Yeah, well, it's really been another example of what works best is when you start with your customer needs, and when talking to your customers, what's missing in their tools to manage the risk they see on a daily basis. And so working through our intermediary partners, our broker partners, the feedback came back to us that a right-sized equity contract, with the growth of the equity markets itself now becoming a contract that's really institutionally sized, they said, resize the contract and give us something that allows us to trade bite-sized pieces, because I'm a smaller retail, small institutional player. So the feedback was great, but it started with feedback from our customer base saying, give us something that suits my needs better than what I'm using right now. So we've had great partnership, great feedback, and that led to a really, really strong launch. So we're very excited. Yeah,
that is very exciting. It's great to hear that there's so much demand for more products, because I think initially a lot of people were thinking that, well, maybe CME is just creating products for retail traders, but really, you guys are creating products for demand for that size contract.
100%. And I think that folks that have been following CME Group for a lot of years have seen us over the last 5 to 8 years build a world-class global sales force. So our drive is to serve client needs. So the closer we more track with our underlying retail customer segment, hedge fund customer segment, asset manager client segment, the teams that we built to serve those customers are getting us to understand their needs. So being able to walk into a customer and say, we have a full suite of products. We are the benchmark asset class. market for every major investable asset class. How can we help you grow your business? Where are the pain points in your business? And so being able to specifically target the needs of retail customers in this particular case, or institutional customers, gives us the pathway for building product that they need. Not products that we think are cool, but products where there's a gap in a portfolio or in a risk management capability for different kinds of clients globally. So that's the success of focusing on your clients, building out a world-class sales force that starts with knowing the client, asking what's going on in their world, and bringing that back to the business, and then partnering with our customers to build product that suits their needs.
Let's talk about something else that's really grown a lot over the past several years, and that's Cimiez options business.
Yeah, I got to tell you, it's been an absolute hoot being able to leverage this world-class franchise. About 6 years ago, we took a look at how we were managing our options businesses, and rather than thinking about, hey, we've got 6 asset classes that have options that support our futures, we actually thought about, we're actually the most diverse options exchange on the planet. So what if we thought about, defined ourselves, and invested in our options franchise as an options exchange? And what would that look like? And what we ended up doing was building out a global options franchise business plan that said, let's invest in the technology, the capabilities, the matching technology, the analytics, the capabilities of a world-class options exchange, and then makes that available across every one of our options platforms. So here's the really cool part about what we've seen in the growth of the last 6 years. The cumulative average growth rate of our options franchise for the last 6 years has been 12%. The exchange as a whole has grown about 6 or 7%. So options continue to be the fastest growth driver for overall volumes, cross-asset class. Futures growing about 4 or 5%, options growing 12%. It continues to be an increasingly higher percent of our total volumes. It's also a huge proportion of our non-U.S. customer growth as well. So this year, for example, year to date, our overall business is up 7%. Our U.S. business is up 2%. Our European business is up 18%. Our Asian business is up 33%. LATAM, it's a small number, is up 183%. So not only are we seeing options grow faster than futures, which obviously as options trade, more futures come in the back end, we're also seeing that an outsized proportion of our growth overseas is coming in the form of options participation. A bunch of different reasons for that, but the data continues to show that we're using options and investing in our franchise as a whole to grow the overall business, reach new customers, and give a broader set of customers access to risk management tools in energies, in ags, in metals, and fixed income that they just don't have access to anywhere else.
So you talk directly with all of your clients, all of the customers. Why have options grown so much? I mean, it's not like they're new. They've been around, but as of late, like you said, 6 years, they're leading the growth.
Yep.
Why do you think that is?
Well, there's a couple of things. I think that we've got a more sophisticated client base that's recognizing that volatility is actually an asset class in and of itself. And while you might have a volatility proxy for the equities market, if you really want to trade what's going on in the global energy market, for example, VIX is not even remotely a close proxy for what's going on in the energy business. So the only place to get access directly to the volatility and the growth patterns of what's going on in energy is by coming to the world's largest energy exchange, which is CME Group. So if you look at what's going on and what's happening in nat gas options, the only way to play, hey, I think there's actually a move coming in the volatility of natural gas, is to come to CME Group. Same thing in crude. Same thing for our COMEX products in gold or corn or beans or what you have in fixed income. So I think there's a sophistication of a client base looking for better tools that actually reflect the underlying volatility across individual specific asset classes. Secondly, as we continue to invest in our technology, whether it's our matching technology on Globex or whether it's pushing out more capabilities on our front end, CME Direct, really we pushed out a brand new analytics suite over the last 3 years to give customers an ability to see what's going on in volatilities across asset class, read what we call an open interest heat map and see what's actually going on between calls and puts in different asset classes to show a sense for, hey, this is where the market's really concerned about that next move. So it's really a function of clients looking for better, more direct ways to hedge different asset class exposures, and we're the benchmark asset class provider, coupled with the investments we've made in technology and analytics to give them the reason to come to CME Group to get the answers to what's going on and then trade those products directly in our market.
What it really sounds to me is that investors and traders are having a stronger hand in the market. They're getting smarter. right?
Absolutely. And it means that we need to be well connected. I'll come back to my global Salesforce conversation. The Salesforce that we built out under Julie Winkler's team, and Dave Hartney is our global head of sales, have done a terrific job of building client, segment, and sales teams deployed globally. And as we continue to grow and scale our global Salesforce, we're bringing salespeople in that come from those client segments. So our hedge fund sales team are run by folks that used to work for hedge funds. I myself spent my time in the banking world trading interbank OTCFX options before coming here because I knew what the market had access to outside of the listed exchange and what we could provide uniquely to our customers. So it starts with understanding where those customers' pain points are, understanding the changing and evolving needs of our customers, and then being able to partner with them and our retail brokers, intermediary brokers, to be able to then build the right product in conjunction with them that solves their needs. And we've always found that product development that starts with the client need generally is the most successful products that you put out there in the market.
A big topic of conversation here at GFLC with the people that I've been speaking with is education. We continue to see CME put a lot of effort into education. What tools do you have for traders right now looking to elevate their options trading strategies?
Yeah, I think that we've done a couple of things. I'll come back to this quick strike functionality that we built. If you go to cmi.com /quick strike, you'll be able to see all of this robust functionality and analytics capabilities that we've never had before. We either relied on third-party vendors to fill that gap, or other people sort of on an ad hoc basis would do that. But we recognize that we've built things like the open interest heat map. We've got a volatility term structure analysis tool. We've got a strategy simulator. We have an event volatility mechanism. We have, a lot of folks are aware of our FedWatch tool. Well, we've used the same kind of mechanics that supports our FedWatch tool that represents the probability of a Fed move up or down in fixed income to build what we call OPEC Watch, which is based on the liquidity of our underlying WTI options market. So using that data, building in, you get a sense for going into the 6 weeks, going into an OPEC meeting, what the market expects to happen. So we have this unbelievably robust data set that we built and are making available to our customers. So the best thing we've done is both partner with our intermediary brokers and give them the tools and trainings and access to that quick strike functionality, but also put that up on our website and bring people to us and say, here, we are the repository for understanding what's going on in the market, what the market data is telling you, and how to access a much broader array of tools and capabilities than we've ever made available before, really responding to client demand. So for us to understand the needs of those customers, again, it's putting yourself in the shoes of what do they need to do their business, manage their risk, or take the positions they want, and building tools that bring them along that journey of understanding for, I could play the markets from a straight long, short futures perspective, or I can add options to my portfolio. And some folks need to understand how does that give them flexibility to manage risks, or how does that give them a much more cost-effective way to play for short-dated moves, long-dated moves, or otherwise. So it's engaging with your customers, either the customers doing a lot of business with you now, or the customers that are looking for a more effective way to gain access to our markets or to mitigate risk in their portfolios.
In my opinion, I believe the work that CME has done with the education definitely plays a big role as to why options are growing so much. Because even myself as a futures trader, not an options trader, I'll be the first to admit it, but going to CME sites, seeing some of the tools, seeing some of the education, it's very helpful. And then you start dipping your toe in the water, you get maybe some third-party education, and next thing you know, you're trading options.
Yeah, it's been very impressive, and we track the new participants in our market. We track the growth of open interest. We've set single-day options volume records. We've set quarterly options. We've set year-to-date options, and most importantly, going back to the electronification and what that means for our market, we've been focusing on putting more options business through Globex because that's the way that we are attractive to customers in Europe and Asia, and the data supports that with the growth rates that we're seeing. Rather than tell folks, hey, if you want to trade options, we're the place, but wait until 7 a.m. Chicago and then place an order then. We've been extending our liquidity out 24 hours a day, and that's where you're seeing growth rates where our Asian options business up 33%, European business up 18%, U.S. business growing at 2%, but you can see the fastest growth is outside the U.S. That's why electronifying our markets and giving customers in Tokyo, in Singapore, in Hong Kong, in Sydney, accessible, executable liquidity on screen during their trading day is giving customers the confidence to act in our markets and use our electronic liquidity to manage risk in their time zone. And the data supports the success that we're having and the way we're extending that out across client segments.
Where can people go to learn more about some of these tools to help them with their options trading?
Yeah, I would say I'd point them back to our website. We've actually just rolled out an enhanced website with a lot more, let's say, easy to navigate functionality. And if you go into cmegroup.com/quickstrike, you'll see exactly some of the functionality we're talking about. We've built out educational modules to let folks know sort of options 101 all the way through very detailed volatility and analytical tools that we built on Quickstrike. And so really pulling people back to our website, that's our best way of putting either rudimentary, here is what an options and this is what a payout profile looks like, all the way through to very complex spread trading and how that flows through your systems. It's all on our website. So we're doing that. We're also partnering with our FCMs and our intermediary partners to work with them to get that information out to their end clients as well. So we're trying to always draw people back to here's how the markets work, here are the products we have, and if you want to get started, we have very rudimentary, basic 101 modules all the way up to kind of 500 level classes, and look for more of that from us as we continue to get feedback from customers saying, hey, I'd love to know more, but here's how you can teach me how to do that. So we're still working on that and pushing more of that out.
Derek, fantastic insight today. Thank you so much for joining me on Futures Radio Show.
Anthony, thanks for having me, and thanks for blessing us with this fabulous weather.
It is pretty nice out, right?
Absolutely.
Next up is Sean Smith, Managing Director, Derivatives Licensing at FTSE Russell.
Great to be here, Anthony. It's always good to be back to Futures Radio.
It's always good to speak with you, my friend. So it's been 3 years since CME Group got the Russell back, and it's been, let's face it, Sean, it's been a huge success. What factors do you attribute to this growth?
It's been just a tremendous story moving the product back to CME Group 3 years ago. I have to say that with the transition of the business back to CME, in the very first roll, 97% of the open interest moved. So there's a couple of factors why. First is that education that we were talking about earlier, and that is that the CME did such a good job of educating the marketplace on how to roll the business back to CME Group, whether it be institutional clients, whether it be simple retail clients on how to trade the product and how to make that transition from one exchange to another. And the clients spoke. They moved the business 97% of the open interest in the very first roll. Tremendous, tremendous success. But since the business has moved, volumes and open interest have grown substantially, which is a sign that the CME is doing a really good job of selling the product and bringing awareness and education to the marketplace on small caps as an index, as Russell 2000 as a tradable product, tradable liquid product. It's very exciting to see.
Yeah, I talked about this with Waqas and how the exchanges have been stepping up the education. I mean, this is 101. The people need to know what products they're trading, what's behind these products.
It's remarkable. CME does such an excellent job of education, and we at FTSE Russell really care about education of our clients as well, so that they, one, understand the index itself, how it's made, how it's created, the methodology. We have an institutional client base all the way down to retail, so we really like to share our knowledge of our indexes with the trading public.
Sean, we hear so many people talk about the Dow, the S&P, the NASDAQ, but not nearly as often do we hear people talk about the Russell. And many would say that the Russell is more of a representative of U.S. economy than those indexes.
It is. It's a domestic index. The 2,000 stocks are U.S. stocks that, there's talk of it being tariff and trade war insulated. Well, it's a perfect representation of a U.S. Of the U.S. economy, and it's starting to gain traction, as you can see, as volumes and open interest grow.
Yeah, absolutely it is. I've been getting more and more requests to do shows on the Russell, and specifically the micro E-Mini Russell 2000 futures. What are your thoughts on how that has been for you guys?
Well, first of all, the entire micro suite of product that the CME launched, it is their most successful futures launch in the history of that exchange. And we're very excited to have the Russell 2000 Micro as part of that suite of product. The volumes have been tremendous. We're very excited to see the growth in the product. The neat thing is, there's kind of a retail, professional trader interest in the product, but we also see the Russell 2000 Micro as being one of those products that you can really surgically hedge a derivatives portfolio of options down to the pennies rather than a larger notional transaction.
Sean, like I said, I've been getting a lot of requests to do more shows on the Russell. In just a few words, Sean, why do you think that is? And give for those people out there that aren't trading the Russell reasons as to why they should take a look at that product.
Russell 2000 is representative of the U.S. market. It's a basket of 2,000 stocks. It's a volatile index. When I say volatile, I mean healthy volatile. It's not crazy swings. Yes. And it's liquid, so you can get in and out of the market and have a really good experience trading the product. So it's tradable, it's liquid, it's a fantastic investment vehicle, so you have lots of order flow coming in and out of that market, and it's a great experience. Everyone should be taking a look at the Russell 2000 as a trading instrument.
Yeah, I completely agree. I mean, for those out there that are trading the E-Mini S&P or the E-Mini NASDAQ or the E-Mini Dow, I mean, take a look at the Russell. It has similar movement, but like you said, it's volatile but has liquidity. Definitely a good product out there. Now, let's shift gears a little bit. We are seeing a growing interest in the Russell 2000 index-based futures outside the U.S. Specifically, I was noticing in Europe and Asia. Why is it growing so much outside the U.S.?
It's because of the nature of the index. The Russell 2000 futures, if you look at the statistics, there's probably 10 to 15% of its average daily volume coming out of Europe, and another somewhere between on a daily basis 5 to 10% out of Asia. It's really exciting to see. I think a key ingredient to that success is the Cimiez ability to bring awareness of the product to those international markets. They do a great job of selling the product globally. That's one. The other is small caps themselves have become a real desired index to trade in. And from a global perspective, that volatility that I mentioned in my previous answer is an appetite, or specifically Asia has an appetite for volatile liquid markets.
Yeah, and we just talked about what's so interesting is that we talked about how the Russell is more representative of U.S. economy. So we're seeing more and more people wanting to trade it inside the U.S. And funny enough, outside the U.S., it's growing just as much, if not even more in some cases. So check out the Russell 2000. This product is continuing to grow. Sean, it's always great to speak with you, my friend. Where can people learn more about the Russell 2000 and what you're doing at FTSE Russell?
Well, you can email me directly. That's smith@FTSERussell.com. You can go to our website, which is FTSERussell.com. You can also go to our partner, Sami Group, and check out their website where they have lots of information regarding Russell 2000 minis and micros. And not to mention the Russell 2000 micros, the symbol is M2K for the micros and RTY for the Russell 2000 minis.
Yeah, everybody, definitely add it to your screen. Sean, what can I say? It's always fun and insightful to speak with you. Thank you so much for joining me on Futures Radio Show.
Great to be here. Thanks, Anthony.
Hey, everybody. I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index Futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. Next up is Tim McCourt, Managing Director and Global Head Equity Products and Alternative Investments at Cimiez Group. Tim, welcome back to the show.
Great. Thanks for having me, Anthony.
Great to speak with you as always. Tim, the micros are killing it, man. Talk to us about this.
I mean, the micros have continued to surpass my and the team's wildest expectations. I mean, it's really been a lot of fun to watch, to see where it grow. When we launched those back in earlier this year. We did a little over 310,000 contracts the first day, which was amazing. But now it's grown. We're doing about 560 or a little over 560,000 contracts per day. So to see that growth where it's almost doubled, in terms of average daily volume since we launched, has, again, been a ton of fun to watch. It's great to see the reaction from the marketplace and from our customers, and I think really speaks to the fact that we delivered a product that the market wanted.
Yeah, absolutely. Something that I'm curious about is, have the micros kept up equally in terms of volume with, let's just say, so the S&P was the big boy, right?
Yep.
Then probably the NASDAQ,
Correct.
then the Dow, then the Russell. Is that the same from the E-Mini, from the bigger products, kept up with the volume on the micros percentage-wise? That's
a great question. So what's been really interesting to watch is when we look at the classic or the traditional E-Mini futures, typically the S&P 500 does about 65% of that volume, NASDAQ doing about 25%, and then the Dow and the Russell 2000 kind of split the balance. What's interesting in the micro E-Minis is NASDAQ proportionally is a bigger contributor to the volume. So S&P is only about 50%, NASDAQ is about 35% of the micro volume, and then similarly the Russell 2000 and the Dow kind of split the balance on the micros as well. But the fact that the NASDAQ is trading much more on a proportionate basis in the micros has been an interesting development to watch, and I think really speaks to the attractiveness of the NASDAQ and the NASDAQ market in general for the active individual trader.
Yeah, that's exactly what I was curious about. So the NASDAQ actually gained traction on the S&P, and the other one, everybody else stayed relatively the same.
That's correct. And we still see the NASDAQ 100 and the E-Mini is also having a great year. That was a record year for the NASDAQ 100 future back in 2018. So the NASDAQ in general remains strong, but just doing a little bit better on it in terms of proportionate basis for the micro. But the NASDAQ remains a red hot story for traders and for the marketplace.
Have the micros volume had any impact on the bigger products, the E-Mini products, good or bad?
And not necessarily, it's still a little bit early to tell, but we would say that looking at the data, it tends to be additive to the complex. And when we look at that, where we can really drill into is if you look at the average clip size of an order, the micros are trading about 2.6 or 2.7 contracts at a clip, which is much lower than the 10 micro equivalent of the E-Mini. So that would suggest that it's purely additive and it's not detracting flow from the E-Minis. And then when we look at some of the liquidity providers that we have in the market, they're obviously hedging a lot of it with the E-Mini. So in general, it tends to be additive to the ecosystem and the volumes that we're seeing so far. But it's still only a few months in. I mean, even though it's been a great success, we'll keep our eyes on it and see how it grows from here. But pleased with it. And again, kind of additive not only to volume, but I think additive to the individual's risk management tool set now that they can use it as CME.
Absolutely. There's so many traders I talk to now that have added micros to their trading, and it's taking nothing away from what they're doing on a regular basis in the bigger products. My inbox is always getting flooded with questions, and probably the most popular question I have been getting since the micros launched is, are there going to be micros in every product? And specifically lately, a lot of questions about crude oil micros.
Yeah, I think it's certainly a question that we get at the exchange as well. And I think in terms of even the genesis of the micro E-Mini equity index futures, it was really in response to customer demand. So we're all ears when it comes to listening to customers and listening to the markets. So I think as long as we continue to work with customers, we'll figure out what other asset classes or products does it make sense to have micros. I mean, some of it could just be a branding aspect, right? Like micro E-Mini is a great name. Micros is a great name. It really gives clarity to the smaller size contracts. But when you look at the underlying need for a micro, it's unique to equities because one of the reasons we introduced the contracts were the contract just as a function of time and index value and the decade plus long run equity bull market we've seen in the US. Those contracts just became more capitally intensive. The contract value grew from 50,000 when it was launched in the 1990s to about 150,000 today on the classic E-Minis. So that's that feature of that kind of passive price action in terms of inflationary pressure on the contract value. That doesn't always exist in other asset classes. So that's unique to equity, which we solved with the micro E-Mini. But certainly we're all ears, and people certainly want things like micro crude, and they're asking for it. But time will tell, and we'll continue to engage with the market to see what makes sense for the next micro contracts.
Thanks for the update, Tim. I want to move on and talk about Bitcoin futures a little bit. How are things going with them? And also talk to us about the upcoming launch of Bitcoin options.
Yeah, so the Bitcoin futures have been another great success story at Sami Group. Not necessarily the same order of magnitude when looking at volume of the micros, but equally a success story in its own right. It's really challenging and difficult to build new futures markets for the derivative space and for our customers. And then when looking at doing on something as new and nascent as Bitcoin or cryptocurrency, that challenge is unique. So just about 2 years ago, we introduced the Bitcoin futures in December of 2017. And since then, the futures contract has grown to about 6,500 contracts per day in 2019. So it's a little less than 35,000 Bitcoin equivalent, because remember, our futures contract is worth 5 Bitcoin. And that's really been a lot of fun to also watch. It's not every day you get to introduce new markets on new asset classes. So that's been fun. And we've seen open interest growth. We've seen volume growth. We've had a few records over the summer where back in May, we traded a little under 34,000 futures contract, just about a little under 170,000 Bitcoin worth $1.3, $1.4 billion. So these are some really interesting milestones that we've seen. And to hit some of these in terms of the first 2 years is phenomenal. The other thing that we're really proud about with respect to the Bitcoin futures is when you look at the global participation in the contract, it's about 50-50 balanced US and non-US, both from a time of day or trading hour perspective, as well as country of origin. So the fact that we've been able to build this contract, build this market, and have it balanced globally is a great accomplishment. And just like I said with micros, we're always listening to customers for demand and product innovation. And ever since launching the futures back in 2017, the overwhelmingly number one request from customers has been options on Bitcoin. So we're pleased to announce, we announced it last week on January 13th of 2020, we'll be launching options on Bitcoin futures at Cimiez. And we're very excited about that. I think that's going to be another great development for the ecosystem, and excited to see what happens from here.
Yeah, I think with this resurgence we're seeing in the retail trader, we can thank crypto and definitely with the micros bringing these traders to trading, I think, even more futures products.
Yeah, I mean, the response has been overwhelmingly positive from the market on Bitcoin options. And like the micros, what's interesting is we're attracting new users, we're attracting new visitors to our website. We're kind of developing that next generation of traders in the futures markets when you think about it, which is always great to watch. And that's something we're very proud of at the exchange. We've been in kind of in this business for about 180 years, right, as an exchange. We just had our 100th anniversary of our clearinghouse. So it's always important for us, like, how do we stay innovative? How do we stay fresh in the marketplace? And working with customers in the market to do new things like micros and Bitcoin and other cryptocurrency products with respect to our pricing products and the reference rate. These are all things that are great and just bring new users and more traders to our market, which is how we stay relevant and how we continue to introduce products that are additive to everyone's risk management needs in the marketplace.
Yeah, I mean, I'm seeing it on my end. I can't tell you how many new users that are coming to Futures Radio Show or Trading Futures and talking to me specifically about micros and Bitcoin futures. It's just a very hot topic with new traders. I want to talk about the crypto reference rate business and why that's important to Cimiez Group franchise.
Yeah, that's a great question. So we partner with Crypto Facilities. It now is CF Benchmarks Limited is the new name of the entity. And we worked with them back in 2015 because similar to other things you've been hearing me talk about this morning, it was really in response to customer demand. Customers wanted to know what the value in US dollar terms of one Bitcoin was. They wanted to establish a trusted and transparent benchmark such that they could know what the value of Bitcoin was. They could use it for things like structured product development. We eventually used it for futures product design. So the reference rates really are a unique offering. And I think what was interesting is when we look back at September, it actually Crypto Facilities received benchmark approval status. So the Bitcoin reference rate and the Ether US dollar reference rate are also the first regulated crypto benchmarks in the ecosystem in this space. So I think that's another achievement that we're very proud of in working with our partners over at Crypto Facilities. And what's important to note is that these are based on spot market transactions. We have very strict inclusion criteria to be part of the benchmarks. And right now we're currently working with the constituent exchanges of Bitstamp, Itbit, Coinbase, Kraken, and most recently Gemini joined over the summer. So we now have 5 major spot platforms involved in the benchmark. And when we look at the Bitcoin reference rate, that population of spot exchanges represents historically, somewhere between 50 and 70% of the daily Bitcoin dollar spot market. So it's very important for us to have these trusted, transparent, and established benchmarks underlie our products and available for everyone else in the ecosystem to use to understand at any given time what is the US dollar value of Bitcoin or what is the US dollar value of Ether. It's an important milestone, and we'll keep on working on developing pricing products, not only for ourselves for product development, but also for the market to understand how these things should trade and how they should be priced.
One last question before I let you go. Today, as we're recording, is November 18th. And ESG Futures are being launched. Tell everybody what they are and a little bit about this launch.
That's right. No rest for the weary here at the equity products team at CME Group. Micros were great, Bitcoin is great, and we just launched E-Mini S&P 500 ESG Index Futures today. Now, ESG is basically a product that follows environmental, social, and governance standards for the marketplace, and the index was created by our partner S&P Dow Jones Indices, and it's really a ESG variant of the S&P 500 index. There's about 316 companies in the index, where some have been removed because they may be involved in things such as tobacco or controversial weapons, but the index also goes as far to rank every industry group of the parent S&P 500 index and removes the bottom quartile based on their ESG score. So it's really a robust index that gives people that ability to invest and trade along with either their individual or corporate values, but it still tracks the S&P 500. There's only about the last 5 years about a 75 basis point tracking error to the main S&P 500. So when you combine ESG on a great global benchmark such as the S&P 500 and then introduce E-Mini Futures at CME, that's a very powerful combination for participants to use to manage their ESG exposure or use it to access the ESG space. In today's launch date, I'm very pleased to report we already have contracts trading, which is always great to see on day one.
Yeah, excellent. Well, thank you so much for all of this great insight today, Tim. Where can people find you on social media, and give us a website to check out?
Sure. For those people who are looking for more information about CME Group and what we have going on, we have 2 Twitter handles they could check out, at CME Group, and the second one is at CME Group Active Trader. Those are 2 great resources on social media for people to stay informed, not only about what we have going on in equity index and alternative investment products, but all things CME related. And in terms of a website, where I would send people as a starting point right now, giving everything we got going on in micros, is go to cmegroup.com/micro E-Minis. That's a great place to start and learn more about equity index, and you can kind of explore from there.
Tim, it's always a pleasure to speak with you, my friend. Thank you so much for joining me on Futures Radio Show.
Great. Thanks, Anthony. Always a pleasure to be here.
Hey, everyone. I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. And last but not least, I spoke to Waqas Samad, CEO of FTSE Russell. Waqas, thank you so much for joining me today.
Thank you, Anthony.
As a leader of the global index provider FTSE Russell, where do you see the most opportunity in the derivative space going forward?
Well, in the derivative space going forward, really we want to try to build on our fantastic partnership with the CME to build out our equity index capabilities here in the US. The Russell 2000 franchise has been built really successfully with key partners like CME and also with the CBOE. And we just want to help them to grow and build the liquidity in those products based on our indices.
I've already spoken with Tim McCourt today, and we talked about the launch of the micros and how huge they were. Talk to us about the launch of the Micro Russell and how that's been for you guys.
It's been a really fantastic launch. The Russell 2000 franchise has had a lot of momentum in the past, but the micro launch has really given it a boost. We're very excited about the future for that, and we're also looking to grow out new markets, whether that's for global clients in Europe and Asia, or whether that's expanding into new asset classes, whether that's in styles or smart beta. We're just very excited about the potential to continue to grow with our partnership with the CME.
Where do you see your business going at FTSE Russell?
Well, we are an international index provider. We're a global index provider. We've got a footprint here in the US, also in Europe and in Asia. We just see the potential to expand our borders and build on our global footprint so that we can meet the customer demand anywhere in the world. North America, Europe, Asia, whether that's for the full range of US equity index products or for international equity index products. But also in the recent past, we've built out our capabilities into fixed income. So we're also looking at whether there's the possibility to build out index derivatives in the fixed income space. And then the third part of our house really is around tools and data and analytics products to support the usage of those indices by both traders and investors.
Well, let's stay there for a second. Talk to us about some of the data and analytics tools that you guys are providing for traders.
For the index products in equity, we've got a vast array of data with a long history and a huge amount of data sets that enable investors and traders do historical analysis. We've got some tools like Analytics Plus, which enables investors in particular to do prototyping and customization of our indexes. And then in the fixed income space, we have a product called the Yield Book, which enables people to do bond level analysis as well as portfolio analysis for fixed income usage.
As a global index provider, how important is education to you guys?
Education is critical because that helps to drive the index adoption, which is obviously the foundation of index usage. Index adoption is all about investors, whether they're real money or whether they are hedge funds, really understanding the dynamics of an index and even some of the basics like what is an index, how is it constructed, how does the index provider like FTSE Russell operate, maintain, and continue to keep the index in line with the market structure changes that are happening. So we get involved a lot through our research effort in the education of investors and index users to be able to help them to adopt them and use them in their everyday investment processes. And that's why one of the key areas strategically for us is to continue to invest in research and analytics capabilities.
Yeah, I mean, working with CME Group as much as I do, I'm so glad to see them and you guys putting forth so many data and analytic tools and just education in general for traders of all levels. I mean, right from retail traders all the way up to advanced traders.
Yeah, and it's critical for us as an index provider not just to calculate and produce the index and all the numbers that go with that, but also provide the content and the research around the indices. Explain how the indices change in line with market structure, give some color and some data about how they're performing, because that just helps people to really get their heads around the dynamics of the index derivatives and the other index products that we provide.
Yeah, absolutely. Now, last question before I let you go. Where are you seeing the most innovation and growth potential looking forward?
Well, there is a huge amount of innovation going on because there is this background context of investors around the world moving from an active to a passive type of investment process. And in line with that, we've had a lot of demand from customers to work with us to develop both single and multi-factor indexes because that's really where the dynamics are going. What people are calling smart beta, that's something that we're getting a lot of involvement with because customers are asking us to really develop new smart beta type of indices. We're also seeing a huge amount of development and interest in the sustainable investment arena. Now, ESG and sustainability are obviously being driven a lot by the interest that there is around the world in the investment process around climate risk and to see whether or not climate risk factors are things that investors should incorporate into the way that they invest and construct their portfolios. So that's another area that's been a real heavy driver of research and development. And the final piece is obviously in the fixed income space. The move from active to passive doesn't just affect equity index users, it's also in the fixed income arena. So our range of bond indexes and fixed income analytics is something that's really been helping us to have that dialogue with our customers.
Really appreciate all of the info and insight you shared with us today. Where can people go to learn more about FTSE Russell?
Well, all of our information is on our website, FTSERussell.com. And obviously in partnership with our key partners like the CME, we provide information and content and distribute it through those platforms. And then from an index point of view, all of our data and analytics are available through a number of data providers, the usual suspects, if you like, in the data distribution arena. But generally speaking, if you want the information from the horse's mouth, then you should come to FTSERussell.com.
Excellent. Waqas, thank you so much for joining me on Futures Radio Show today.
Thanks very much, Anthony.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.